Good morning. This is Tom Alexander. It is Sunday, December 10th. We are rapidly now approaching the middle of December. Time does fly, doesn't it? We have a lot to discuss this week for the upcoming week in the U.S. stock indices. We have been in protracted balance areas, especially in the SPX, the Dow. I'm looking across here. I'm going to show you guys the charts in just a minute. But a couple of notes I have mentioned before. December can be very, very tricky. There is an inclination for the market to rally strongly into the end of the year. Now, has that rally already begun, or are we going to get a retracement first? I think we may get an answer to that very early next week. Let's take a look at the charts. Okay, we're at inflection points in the indices. And what do I mean by that? Well, we are at levels from an auction market perspective, okay? Everything that I do is from an auction market perspective. You hear inflection points all the time. People have a different idea about what creates an inflection point. My methodology, the way I've been trading for almost 40 years, is to use auction market concepts. And the concept of an inflection point from an auction market perspective is when a market reaches an auction market level from where it is very likely, more likely than random, to move sharply away from it because of it's at a key level. And there are three primary key levels. You have the upper extreme, the lower extreme, and the high volume node of a balance area structure. And when you are coming out of a balance area or you're in a balance area, it is about as the most defined market condition that you can get. It's really an ideal condition because this three-step process of development that is in effect in all degrees of time all the time is about to play out before your very eyes. I want to show you something now. Okay, let's just take each of these one by one. I'm going to look at the SPX. And sometimes the levels on a market aren't very clear. Sometimes there are numerous levels in the market, and you end up with too many if, and, or buts for those levels to be particularly helpful. That's not the case as we head into Monday's trade. The levels that you see on the chart here are critical. It's basically this 4607 level that is the print high from the rally that concluded at the end of last July. Then we have Friday's low. That's important because this appears to be an attempt to break initiatively out of an extraordinarily mature balance area. And I'm going to show the profile view of that in a minute for those of us that have been using market profile for decades. You can look at a bar chart and you can see the profile view. And I will show the profile view in just a minute. But Friday's low now becomes critical because it does represent an attempt to break initiatively out of this very mature structure. If it fails, it portends a very sharp move to or through this lower level at 45.36. The all-time high in the SPX is only a little bit more than 4% away. Let's look at the index. Now, there's a bit of a divergence between the print high and the SPX. The index, as you can see, however, the index is only 3% from an all-time high. And again, you have the upper extreme inflection point is not that far away, and of course, Friday's low. Now, let's look at the Dow. And the Dow is only 1.5%. That's one day. Easily, we could do that in one day if they start pushing the buy buttons. That would be really, really interesting if the Dow goes to a new all-time high, because it almost certainly, at least initially, will not be accompanied by any of the other indices. That would set up an extraordinarily significant and major divergence. Now, that divergence could resolve bullishly, but it would set up a divergence that would be, everyone and their brother would be watching it. So we shall see if that happens. Now, The immediate upper level is that all-time high in the Dow. To the downside, it's Friday's low. You can see the lows, the print lows here. It's quite remarkable how these lows have all formed within a few points, less, far less than 1%. But if Friday's low is taken out, these other lows are quite probably going to be taken out. And last but not least, the Russell. And the Russell is sort of its own animal. It is in an incredibly large, incredibly well-defined balance area at the moment. It's net bullish that we're seeing some strength in the Russell in the broader market, but we shall see. Here are the levels. It's basically Friday's high and Friday's low. Okay, I promised I would show you the profile view of this, and there's a lot on this chart. Now, this is the SPX, and these are day sessions. This is the cash session. Let me unfreeze this. I don't know why it does get frozen, but it does. Okay, this is the cash session. Look at the overlap and all this price. Now, I'm going to merge this, okay, into the auction that it represents. And this began back on November 20th. And I'm going to carry it through Thursday. And here's that auction. Now I have posted this in the weekend report, which you can view these charts at alexandertrading.com. Go to weekend updates. And by the way, if you're finding value in this, please like the video. Please subscribe to the channel. I'm trying to grow the channel. The only way to grow it is if people like it, subscribe, and make comments. That's just the reality of our wonderful digital world. Okay, so this is a balance area. This is about as pristine a balance area from a market profile perspective as you're ever going to see. They don't all turn out in this nice, neat Gaussian shape, okay? But this one happened to. Now, this was quite a mature balance area. This is Friday's trade. Friday's trade is very significant because it is an attempt to break initiatively out of this balance area. Now, you have to default to price action. I have learned this the hard way. I'm going to show you some things in just a minute that give me pause for the bullish case. However, there is nothing from a price action perspective that suggests yet that this is bearish. And you have to give the benefit of the doubt to the upside. Now, I've already shown you a couple of things. If we take out Friday's low now, it's definitively, unequivocally bearish. If it doesn't, we could be in the process of having another leg higher. In this three-step process of development, and I talked about this in the report that, again, you can see these charts and you can see the verbiage on the website, alexandertrade.com. Go to weekend updates. Now, this is the same process that has been followed since the October low. I mean, you have a trend, you have a stopping price, you have a development around that price. This is all a balance area. Then you have a trend, stopping price, balance, and here we are once again. Now, this is the latest and greatest attempt to break initiatively higher. Now, that's great. Price action is suggesting we can know without equivocation, this is an attempt at an initiative trend. So we're going to get some sort of sharp move very soon next week, very early next week. I think it's very improbable that we just sit up here and grind around for 2 or 3 more days. Now, we could, but you have to this is a market condition that is extremely conducive to a sharp move. Let's leave it at that. Now, let's look at a couple of other things. Let's go to the technical view. Now, what I use, I am a pretty strict price action based trader. However, in the indices, we have information that is price based, that is auction based, that we can use. And that's the fact that the indices are comprised of components. We're trading the forest, but the forest is comprised of trees. The trees can give us a message about the overall health of the forest. The red line you see here is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues. And below, you see a histogram with closing breadth. We have divergences in the 5-day and the 10-day. I have warned many, many times over and over and over again. I'm going to do it again now so that everyone hears me. This is a blunt instrument. There is a significant divergence. You have significant divergences at every single top of significance in the market. However, you also have significant divergences at many, many tops that aren't tops. So you have a lot of false signals. This is a heads up. This is once again pointing to the idea that next week is we're at a internal price inflection point here. Something has to give. Price is going to once again accelerate higher, or we're going to rip through this range to the downside in a fraction of the time to create it. That's the definition of a false breakout trade. False breakout trade is when you have a mature structure, the market trades outside of that structure in an attempt to generate initiative activity. If it fails, it will fail sharply and quickly. So that's where we are. This is suggestive, and it's at least a heads up to let price confirm the bullish case or the bearish case. Okay. Now, one more view, a more granular view of that same information is from the 30-minute SPX chart with breadth underneath. We closed on Friday near top tick, and we had one of these Friday levitations in price and closed near top tick. Well, breadth did not participate. Breadth went out at plus 347. Now, does this mean the market is going to crater? Not necessarily, but it is, once again, it's a heads up. This is what you will see when the market does decide to decline. You will see a divergence between price and breadth. Now, I'm going to show you, I want to go back to this real quickly so I can sort of set the stage. Let me go to the SPX. So you see this balance area right here. And then on Friday, we closed above it in an attempt to break higher. Now I want to show you a similar, this was a balance area. It was not as protracted as the one that we're trading in now, but you can see right here, there's an attempt to break out of this balance area on this day. And it failed spectacularly. Now, it closed at the upper extreme, but then it gapped down and we traded sharply lower into the, ultimately the October low. So let's take a look at what our SPX 30-minute chart was doing at this point in time. So this was mid-October. Let's go back over here. And I have it all queued up. And here you go. So here is the balance area here. This is, again, this is a 30-minute chart. This was the attempt to break out to the upside right here. Now, pretty minor attempt, not exactly like what we see now, but you can see how rapidly this was rejected on this attempt to break out. You can also see the divergence here. Actually, you can see a series of divergences, and we have an even greater series of divergences working now. But you had divergences of several degrees at this level. That's what we have now. Now, this is a sort of a binary situation. We're going to get immediate sharp selling, or I think we're going to have this divergence erased, and you're going to get another rip higher. Everything is pointing to that. Market structure is pointing to that. The relationship between price and breadth is pointing to that. You have divergences between and among the indices. That's pointing to that. So next week, early next week, could be fun. Okay, guys, I hope you have found value in this. And once again, if you did find value, please subscribe. Please like the video. Please make comments. I will happy to answer any of your questions. You guys enjoy the rest of your weekend.